stop loss is a determinant factor that determines the loss in the market, likewise your profit. But in this video, I will be showing you how you can use that to your advantage, how you can use stop loss, this stop loss strategy, how you can use stop loss to beat the market and be ahead of the market always. I'll be showing you the #1 stop loss strategy you need to know. Listen and follow me through this video right now. Click the link below right now. Alright, so as I said earlier, I will journey you into how you can stop losing in the market and how you can stop getting the stop loss wrong, having the best stop loss strategy, because one of the key factors in the market that determines your profitability and determines your profits and your losses weekly is your stop loss strategy. So I'll be revealing these tips, strategies that will help you, and of course that will definitely skyrocket your trading journey to the next level. Yeah, because you need to understand beyond just setting how to set stop loss, beyond the mixing levels, beyond position sizing, there are things that you need to know around this. What I have discovered over time and over the years, and this is what I want to review to you, and that will definitely help you, guide you, and then of course put you ahead of the market, help you to beat the market in one way or the other. Now, this is what you should know. Okay, let's start from this. People often says, I see many traders, many beginners copy their mentor because, oh, my mentor uses 10 pips, 5 pips, I want to be using 5 pips stop loss too. It's not in that factor. Stop loss usage is not determinant of your mentor or your coaches or anyone that you may call. It's a determinant factors of your trading style, determinant factors of the setup you have, determinant factors of what you want to reach in the market, determinant factors of the quality of that setup, determinant factors of the pair you are trading, determinant factors of the risk-reward ratio, the RR ratio, determinant factors of all those stuff. Those are the words that determine, not just by you. For example, you just see a setup and you want to risk 5 pips on it, because that setup is a very good setup that could give you 1 to 10. If you try to risk 5 or 10 pips, you will definitely hit you and you will hit out, and you keep seeing yourself, why? It's wrong. It's wrong. That's why, because you're getting it wrong and you're trying to copy someone. I tell my students, you can learn from someone, but you don't copy them, because this is a game of personality. You look inwardly, you look at yourself, and you look at what you can take, because it's a game of risk and reward. What you can take, what someone else can lose, someone else cannot afford to lose it. I can afford to lose $100, $20, and I won't be moved. Someone else cannot afford to lose that. Someone else cannot afford to lose 5K. I cannot afford to lose 10K. Someone else can afford to lose 10K. I cannot afford to lose, I cannot afford to lose 50K. So it's relative. You can't determine that. It's relative. Okay, am I talking? So it's very, very much relative, and of course, that is how it is. So okay, let me also establish a factor around this about people about your stop loss usage and everything strategies that you need to get into your trading style in 2025. Good. So aside from that, people trying to use stop loss are not meant to be copied. You are meant to determine the market will tell you the stoppage you use, and the RR ratio that you tend to bring up from the market, it tells you what to use on that. And mostly I want to say this, why if you are the kind of trader that you often get wicked out, market often gets you wicked out suddenly, or out of your trades for the week, after probably you take 2 or 3 trades, you get wicked out 2 times, and then you get wicked out. By the time you entered, you have to re-enter, you make time to enter, and then the trade you entered went away, and then you end up breaking even and not making profit. By the time, so you end up not making significant profit because of what? Most times you are entering at the second phase or third phase as you get wicked out from wicked out, and and also it affects your over trading for that day. Perhaps you wanted to trade just 2 days, 2 trade per day or 3 per day. You are ending up trading 4, 5, 6. That is over trading, and that will not journey you into profitability. If you keep doing like that, you will not position yourself into profitability. That's the fact. You will not. You should not be trading over trade. You should not be doing. I used to tell you that you should not be doing more in the market. You do less to make more. It's not a 9 to 5 job where we do more to make more. This is another system entirely, another psychology game, another psychology business where you have to do less to make more. So if you are the time that oftentimes whenever you see a setup and you end up wicked out, or oftentimes you're not always getting it right, it's not because you are wrong with the setup, or your setup is wrong, or you're not good enough. You're a good trader, you're doing fine, just that you do not have what you call stop loss strategy yet. And with that, I will be showing you today how you can do that correctly and implement these stop loss strategies that will skyrocket your trading journey entirely and for life. Now, this is what you should know. Number one thing about setup trading is this. Setup trading is, of course, cannot be taken away. That is the fact that determines your profitability and your losses in the market, because this is a game of profit and loss. You count your loss and you make more of your profits. So it determines your losses and of course your profits. Now, if you want to make more profit, is when you have to risk less so you can make much more. Now, one thing why you are always eating that stop loss being wicked out or mostly is this. Firstly, you should always pay attention to one thing. Now, I want to say this is the first point. You should always pay attention to what area of concentration. Why you are always being wicked out, or mostly you get up being wicked out, you get up or being going against you for a while, 10 minutes later, 15 minutes later, 30 minutes later, or 1 hour later, then massively came to your entry, came to the direction and begin to sell and sold for like 2-3 days, or bought for like 3-4 days. I'm like, wow, I saw this setup, I knew it's gonna buy, I knew it's a crazy one. But you keep what? Wicked out. You keep what? Getting wicked out, losing your money before the market eventually moves. You have already, perhaps $100 or $1,000, you have already lost 50 or 40% already. And by the time you are entering, you don't have the purchasing power more again to open more position and make much more. So you get, so it kept setting you back, bringing a setback to you in your trading style. It's because of what you are doing something wrong, which is what you are not selling or buying at the area of concentration. I call it area of concentration. Some people can call it area of zones. Some people can call it support and resistance. Some people can call it demand and supply zone. But always, most importantly, it's an area that you have to pay attention to. Look at that setup very well. How many connections of those areas do we have there? Is there area of concentration? If you have watched our video, you will see how we explain area of concentration. That is where you should be buying and you should be selling. You should never, even markets remain 10 pips or 20 pips ahead of that area of concentration. Don't sell. Wait for that market. Let it go. Because surprisingly, market can show you confirmation for sell or buy, and within 10 minutes to click the buy and start buying, and market will just go back to the area of interest. Just do alarm, just obey it first, then you wicked out, then begin to sell. And then wow, and your stop loss being taken out because of what you didn't wait. That is it. So I have experienced this also over and over time, where I get not to stick to my trading plan. I get to sell or buy below a bit or higher or anyhow my area of interest. You should always pay attention to your area of interest zone and let it show, because market can even give you double top, double bottom, and yet it's not at area of interest. That market is fake out. You should be able to know. We have done a video around that. Look at this video around there, how you can deal with fake out and trading, how you can deal with that. So number one key is what? Area of concentration, area of interest, area of attention. These are the zones where you should always buy and sell. Watch our video to understand this. It's not just any area. You can watch our video so you can understand this area of concentration that we talked about. So these are the things that will help you. If you are selling at that point, at that area, you will definitely be profiting, and then mostly of the trade will not keep getting hit by Excel anymore or any other thing. That is one. Secondly is this: you most times when trade keep eating your stop losses or keep wicking you out or not making profit enough, or by the time you are market start moving, you have already lost. You have to enter second. You know all these kind of stuff. Why is causing it? What is really causing all this stuff? Is second is what you are not selling the white pair at the white section. For example, you're trying to sell or buy USD, let me say trying to sell Euro GDP doing Tokyo. For example, whereas Euro Britain or GDP is already at night, that section liquidity is already at a lower tendency. Market is not moving on that, particularly for Euro. It's not moving that, but in JPY Asian itself. So you should be looking at for what? Asian pair, since you want to trade Asian. So for example, so you now want to trade such pair EURUSD, and it's meant to be traded on what? Doing USD time, New York and London time. You want to trade it doing Asian, late Asian for that matter, not even the time where there are still it's a bit late Asian, and then Euro is around night already. or the midnight already, where the market's liquidity has closed and everything has dropped down, you want to sell or buy them, you definitely want to get ripped out because of what you are doing it the wrong way. So you should not be selling or buying such pair on their wrong sectional trading, market trading section. Am I talking? So it should be at the right section. So for example, if I'm meant to trade, I'll firstly pay attention to Asian pairs more. If I'm to trade Asian, I want to just pay attention to Asian trade or Australian because they are a bit closer. I'll pay attention to Asian more. Once I see JPY doing fine, any JPY pairs doing fine, but I know that this is the section, I'll be willing to go for it. And I'm willing to what? Of course, to take it once it makes sense. So that is what you should always pay attention to. So if you are not in that sectional market times, you are trading off section of such pair that you want to trade, even though it presents an opportunity. Let me tell you this, even though USDJPY or JPY anyone presents an opportunity at that time, do not trade it. That opportunity will still come and present itself when it matures at its right time. London or New York, London or it don't matter what, ignore it. Don't be tempted to do an impulse buying or impulse sell or impulsive trade. Don't be tempted. Don't be tempted. If you want to, probably you can put, you are a swing person, or you can do a stop loss is wide or anything, no problem then. You may not be wicked out. So what I believe most of the time, what from experience is that what if it is behaving opportunity at the what at its section time, don't worry, it will present the opportunity again at its right section time. So that's why you should always know and keep that in your back of the mind. Am I talking to someone? If you are enjoying this video, please subscribe to this channel and follow us on our YouTube. Of course, if you want to join our family, if you have a big family on Telegram, you can look at the link below and the description, of course, as well on our bio to join our family. We drop signals, daily signals, fantastic one. Yesterday was about 300 pips. You catch the NFP, it was crazy. We saw it coming, it was crazy. It moved back within a second, 5-2 minutes. Everybody was already in crazy profit. About 300 pips we moved yesterday. So this is exactly what we do. We drop educations, video specs, and lots more on our free community. So you can join as well. It's free. You can join us as well. Thank you and God bless. Let's continue, guys. So that is for that. And the last one I would love to share with you why you to get wicked out and why you're not using the stop loss strategy widely is this. Is because of over trading, over leverage. For example, you have $10 already, market, you have $10, you want to flip to $100. It's not bad. It's not a good thing. I should tell you, when you flip to $100 and you have opened your position, and of course you have the leverage there and everything. Market is still doing a correctional move. You have doubled down. Correctional move. So you have to wait for market what to complete its correction. After every move, note. After every move, not what you want, correction. It might be in any form. Correction can come like this, or can come like this, can come like this, or can consolidate, can come in any form. It's just correcting itself. Impulse correction. Nothing really is correcting, so no matter what. So market is still correcting itself. That's not really confirmed yet. Though you can find anything around that, no problem. After you have found anything, market has not even yet confirmed the move. You have doubled down and market just even break you out, or doesn't even wake you out self. You receive a margin call, and that's how you play account. So that's exactly how you used to blow account. That's how people just keep saying blowing account. Oh, why? You play account there because of what you didn't wait for the market. Now, if you want to do that, you should always wait after the correction has completed. Let market shows you the proof, the move first. I'll show you the way. This is what we show our students. Anyway, that's why I said you should join our community so you can always learn this. So once market confirms its moves and we tested below or above, we tested, then you can always enter for that entrance, and then of course to double down. And because of that, I've showed, okay, I want to go this direction, I've gone and I've retested, I still want to go again. So you cannot double down, of course, and begin to work, and that's how it moves. That's how you should do that. Like talking to someone, not you trying to work when market is still correcting itself. When it's at correctional level, you want to double down, you will be wrong. You will get it wrong. So that is exactly how it works, guys. I hope you learned something today. Thank you so much for joining me once again, and do not forget to subscribe to our channel, follow us on our telegrams, and drop your questions. Let me know your own stop loss strategies and what you have been using so far. Tell me in the comment section. I will definitely reply, or any of our team. Thank you and God bless you. Bye for now. Cheers.